Hey everyone, it's Evan here from the Trade Risk on Friday, March 9th, here with a weekend market recap video. We're going to cover all the major markets, the current market environment, and then finish off looking at some sector analysis. So quite a turnaround week here for the bulls. We saw stocks accelerating higher, moving higher throughout the week, accelerating higher on Friday. We saw the VIX drop below 15 and close below 15 for the week, first time in a couple of weeks. And when we look at our leadership groups here, our leadership roles of indices, we have the Russell 2000, which continues to be out in front, leading in terms of performance, followed by the NASDAQ, followed by the S&P 500, followed by the Dow. So in terms of risky sectors, subsets of this market, we have exact alignment of what we'd want to see for bull risk appetite. And we had the NASDAQ also closing at new all-time highs, something we've mentioned a couple of times that wouldn't be too much a surprise given the fact it was so close over the past couple of weeks of trading. So lots to talk about here. Stick around for this week's weekend market recap video. All right, let's jump in here with the S&P 500, the SPY ETF. We're looking right at the weekly time frame. So each bar here represents exactly 1 week worth of trading. And when we look at this week's session here, you can see a beautiful sort of open at the lows and close right at the highs here. Beautiful looking candle, 3.64% to the upside, almost 10 SPY points higher by the close here on Friday. Now, one of the things we were talking about last week when we had this bearish engulfing week that got put into motion here, we said heading into now this week, we need to see, will the sellers get that follow through to the downside? Will they follow up this bearish engulfing bar? The answer, now that we have hindsight in our favor, is no, there was no follow through. It was a complete reversal, and all of sort of last week's selling proved to be a nice shakeout before the market could pivot and run higher like it did this week. So when we look at this landscape, once again here, we are above now all of the rising fast moving averages here on the weekly time frame. That is the 8 period and the 20 period EMA. We can zoom out here. We're holding above all major trend lines, and we look to be in motion to head back towards these all-time highs here. We're in the top, say, 70% of this range here from about 286 to 252. We can see we're just about here around 70 or so percent, getting close to retesting the all-time highs in the S&P 500. Now, we didn't quite. Now, one thing that is interesting here, which if you want to be really sort of aggressive in your bearish outlook here, you could make a case that this was an inside week, as it was. We didn't quite take out the highs from last week, came very, very close, but didn't quite do it. And in fact, we haven't taken out last week's highs either, right? We're contained within those highs. We haven't quite closed above them. And if you're a bear here, you would want to see basically an immediate collapse right now, and you could still probably make a case where this turns out to be some type of bear flag, with this initiating the original impulse leg to the downside, retracement back up, and then we roll over here. Again, there's a lot of evidence that would stack against that in terms of momentum, participation, breadth, but it could happen, right? There's always a probability, so you could keep that in the back of your mind. But again, let's take a look here at the daily chart to get a slightly more granular picture. So when we look at this week's trading, this was Friday's action. Now, this is where things really started, because we had the reversal here. We had this gap lower on Friday, and then we saw this strong finish. We did not finally see a continued day of selling like we did for 3 days in a row. We saw the bulls finally reverse a bit here and close above Thursday's lows and Thursday's closing print. When we started the week this Monday here, we had a bullish continuation week. We did start with a gap lower on this week, but notice that was basically the lows of the day here on Monday, and then we rallied to a green and then closed strongly here on Monday to begin the week. Tuesday, we had our midweek video, so if you watch that, this isn't catching you basically back up with where we were on Tuesday, but it was basically just this kind of sideways, very tight consolidation day after Monday's ramp higher. And basically the thought process here on Tuesday for us in our analysis on the S&P 500 was this range of say 272 to 274 right in here. This was the pocket of previous supply. The 50-day was right in there. The 8 and 20 period were flat and still bearishly aligned here on Tuesday. And there's a confluence of technical indicators that we said we really wanted to see this market break through to the upside or thrust lower to the downside to basically get some more directional confidence in this market. And basically what we concluded with on Tuesday was, if you're a bull here on Tuesday, what you did not want to see was a strong range expansion, a thrust lower off of this very important range right here, right around this 272 to 274 area. You did not want to see a thrust lower, an expansion in volatility, take out the previous day lows, because that's when things get really dicey, given the fact that that would be taking place at a significant spot in the market. And as it stood that night, or after posting that video, the futures market, we did see some nasty action, down over 1% in the futures, basically traded all throughout the overnight session in the red by over 1% in all of the major averages. And in fact, we did open lower here on Wednesday, and Wednesday, I believe, was the key level. And the way I interpret price action anyway, I think Wednesday was the big clue here for the market in general, is we had this gap down below the prior day's lows, below and starting to break back down from this significant area here in the S&P 500, call it 272 to 274. And this was the seller's opportunity. This was the bear case here to really sort of run and roll this market over, but they couldn't do it. There was no follow through. We were unable to close at those lower prices or even trade at those lower prices for too long. And in fact, we saw a complete kind of gap fill and close right back here at essentially Tuesday's highs. So I think Wednesday was a day to pay attention to. This was a day where sellers proved to get no follow through. Again, we were still stuck in this range here, so I wouldn't say it's confidence to load up the boat on the long side, because I think there were still risks in here. We wanted to see, again, follow through to the upside, but I think that was a good short-term tactical, maybe foot in the door exposure, or let's not be aggressively short this market given the fact it failed here on Wednesday's attempt to roll over, and that was a good day to take notice. Thursday, again, not much to say about it, closed strongly, but still in this range. And then Friday was a definitive sort of move higher, thrust away from this range, and continuation to the upside. So as it stands right now, we look at the S&P 500. I still, on the downside, would be paying attention to this 272 to 274 right in here. I think, again, there's a lot of confluence of technical indicators and prior price action in here. So that would be my short-term level, basically the lows from Friday. And in fact, when you look at Friday's action, it was basically a gap and go. We gapped higher, and then we just continued to rally right through the day, right into the bell, where we closed the week at the highs. So as it stands right now, this market, bulls here have the wind at their back here. We're building some momentum in the S&P 500. We broke above this level here. We do still have the highs from last week, right, that we have to contend with. And you could make a case that we're still, we're perhaps a little short-term overbought, especially when we look at some of the other major indices and some individual stocks. So, some digestion here is fine. It's welcomed. I wouldn't call it the end of the world, but if we gave back and immediately rolled over, just like we did here on Tuesday of last week, right here, if we started to just violently roll over, bearishly engulf, any of these previous sessions here, fill this gap in a violent type of fashion, then I think, again, you have to reevaluate and respect the fact that this market, is just reluctant to get some significant follow through. So that would be what I would look for to sort of reverse or diminish the progress the bulls made here throughout this week, and particularly on Friday. But again, as it stands right now, momentum is ticking up here. It looks like bulls are in control and wanting to sort of move this market higher, and you could view it as the bull case now as right here from basically the lows of February Let me draw this out for you guys. So basically you have the lows from February here. You got this nice leg higher. You have a little bit of a pullback right here. So you get about a 40 or 30% pullback of that initial thrust higher. And then you potentially are getting a second leg higher here again. I'm not going to you know, go for precise moves here or say that we have to make some type of measured move up to into the 290s. It's a path to think about, and it's a path to, you know, want the market to follow basically. And if you are in the bull camp here, you want to see basically the majority of these gains hold in from Friday, maybe base out a little bit, let the moving averages catch up and then continue higher. Or of course, it's just a complete squeeze and melt up, and very quickly we want to be back up here. That would be, you know, of course, the bull case. And then on the levels on the upside, 286, the prior all-time highs, not too much else that stands in our way here. A little bit of a gap, it looks like, right around 281 or so, and some prior dancing around right around 280, 281 that maybe we make a pit stop at, but otherwise it's basically the all-time highs. So that is the read on the S&P 500. Bulls in control again. It could have been, you know, this could be another fake out here where no follow through happens and we do reverse. So there is a probability and possibility that this was the excitement that is going to evaporate heading into next week. We'll have to see, but I think as it stands right now, there's a lot more evidence in the bull camp that this should continue rather than reverse. When we look at the Russell 2000, a nice pocket of strength here. It's been the leadership index for at least the past couple of weeks now, and you can see well extended, overbought here in the short term, but the 8 and 20 period momentum reading here by how extended and how much distance is getting in between price and the 8 and the 20, you can see there is that momentum, that sort of melt up, that markup phase here in the Russell 2000, and it looks like it is very set on retesting the all-time highs here. When we look at the weekly chart, it's an explosive 4.31% to the upside here, a very large range move, not a significant amount of volume, but still very constructive from a price action perspective, right above now all of the rising 8 and 20 period weekly moving averages. And when we look at the NASDAQ composite here, or the NASDAQ 100, I should say, 4.3% to the upside, closing at new highs here. Again, not a tremendous amount of volume. When we look at the daily chart, a gap and go above prior resistance here. Pretty bullish pattern to gap and move and just continue to move right above this prior 171 level, call it. And again, a nice strong close there. Ultimately, the NASDAQ 100 was holding up best in class. We talked about this upper level support all the way back here from last Friday. And that did prove to hold. We got follow through, basically the same exact path as the S&P 500, just gains were magnified a bit as we launched into new all-time highs. So lots to like for the bull case right now heading into next week. Let's see if we get that follow through. Let's see if we can hold on to those gains. But so far, NASDAQ, Russell 2000 out in front leading, the Dow and the S&P 500 a little bit lagging, but that's okay as long as we see, you know, we don't see any strong givebacks or violent retracements into next week. So that is the Russell, that is everything. Let's take a look here at some other major markets. We'll go to TLT, which once again finished very flat here, basically down 44 cents, still carving out a sideways range here. Not too much to say about it except for it's fueling up. It's trying to you know, firm itself up a bit here, and we'll have to see how this acts. If we do see some range expansion next week, you know, pay attention to essentially 117, I think, is just your nice round number here. Is if we start to lose all of this supply in here from the past 20 or so days of trading, that would be certainly the bear case here for bonds as they potentially leg down for another move lower. But again, on the upside, we want to see some of these moving averages flip around, and if we want to get that upside resolve above 119, that would be a good start for TLT. Next, if we look at metals, GLD here, a little unfortunate finish to the week, had a nice start to the week. When we look at GLD on the weekly time frame here, you can see it was just slightly positive, but basically flat, failed to hold on to the rally that was basically underway for the start of this week. But you can see from this kind of pattern perspective here and the structure that it's in, not much has changed. It's basically just kind of a muted sideways week for GLD, and we're still paying attention to the larger, say, 124 support to the downside, and then we have kind of this this trend line coming in, extending from recent highs here back from January of 2018. So from the weekly perspective, not a whole lot has changed. This market's moving sideways here in the context of this uptrend that started from December here. So we're still waiting for a little more action. It looks like we'll have probably some more consolidation to you know, on the near-term horizon, but something that I am still long. You know, we still have that position in here from this day here on Thursdays when we bought some GLD, and we're still holding it. It's a longer-term trade, not looking to flip it out super quick. So I'm going to give this some time to play itself out, but we'll have to see. If it starts losing 124 or so, then, you know, of course, all bets are off and probably throw the trade away if it starts to break down. So that's GLD. Silver, again, had a nice session going here on Friday as well, but gave a little bit of that back. You can see on the weekly chart here, almost 50 basis points, 0.5% higher for this week. You can see it's still below the 8 and 20 period weekly moving averages here, and you can see it is trying to firm itself up. There is evidence here that silver's trying to put in a base. It's trying to reverse the selling pressure it's seen throughout you know, most of 2018 at this point, and we'd want to see a close back above 15.75 or so, and then ultimately $16 to really get the momentum going here in silver. But for now, it looks like it's going to need more time. Let's respect it, let it consolidate, and maybe something sets up for us going forward. Look at USO next here. You can see a nice finish to the week, 2.63%. And, you know, basically when we look at the price action here, we have this trend line that extends from late January, early February when we started this retracement leg lower. We saw this an ultimate low down here, or a higher low get potentially put in right around 1170. Nice about $1 or so rally up to about 1280. And now it's just kind of ping-ponging back in this channel here. Flat, fast-moving averages. So a little bit of a consolidation going on here. Let's see how this ends up morphing itself. Follow through, you know, above 1260 or so, get above this trend line would be a bullish development for USO. If we start to lose the lows around $12, be a lot more pessimistic there, at least in the short term, for oil. And when we look at natural gas, you can see still a fairly sleepy market. Take a look at volume here. It's just trading at you know, basically some of the lowest levels and lowest, just most complacency that we've seen here in quite a while for natural gas, and the price action and the ranges really show the same picture here. So not much looks to be of interest right now in natural gas. Bulls tried to get something going this week, gave a little bit back towards the end of the week. So it seems like a fairly dead market at this time. Look for that volatility, that volume spike. Maybe that'll give you some clues as to when this is starting to heat back up on the up or downside. So those are the major markets I wanted to cover. Let's look at some of the sectors here. Semiconductors completely on fire here, just continuing to race higher, 5% on this week, breaking to new highs here. And when we look at, say, the daily chart, we're clearly extended, right? We've just had a nice run, but you know, it's not a market, or it's not a sector of the market right now that is easy to short, or I would advise shorting, even though it is overbought here. It is the leadership group. It continues to be the leadership group here, so let's respect it. If we started to get some type of violent break back down 108 or so, you know, a quick reversal, something like that, then you have some of the developments of potentially a false breakout, and then a little more actionable sort of short signal if you're really aggressive and tactical. For now, I think you got to respect the strength here, and you know, recognize it is a bit overbought, but doesn't give you a reason to short it. XLK really, you know, not too far off here, breaking to new highs, gap and go today, above all prior highs. It's overbought here in the short term, but lots of momentum and a nice leadership group for this market. We can go to Biotech, which also has had a nice run as of recently. This is XBI, the equal weighted biotech here. You can see up almost 5% this week, very cleanly taking out. We had this series of 4 prior weeks highs all stacked up at this $93 level, and we sort of launched through it throughout the midpoint of this week. This is a trade that we were involved with in LABU, which is more or less a 3x ETF on the XBI. We've scaled some profits in that already, but we still have that position on. So Biotech has been a nice leader here, and you can see the prior all-time, or the not the all-time highs, but the prior highs here was back on January 29th, so $97. That looks to be a good mark here. In the short term, it is overbought again, but lots of momentum behind it, so let's respect it. And you can look at the IBB as well for Biotech. Again, nice strong week here, 4.3%, getting quickly back to the January highs. So that's sort of the leadership point areas of the market. I'd say, you know, let's talk about financials real quick, because I've had a couple of questions come in on them. You know, financials look to me very similar to the S&P 500 right now. We're back to basically challenging last week's highs. We had this nice gap and go today. We resolved above this 29 area, which was a lot of just emotional supply and technical indicators, you know, kind of littered in this area as well. So we did break above it. Nice close here. I like financials. I mean, it's kind of the same analysis as the S&P 500 is, you know, we're taking out some prior resistance and heading back towards potentially retesting the highs there from January. So that's financials. Let's take a look at some of the laggard sectors here. Is XLE. Now maybe it's stabilizing. It's still relative underperformer as of recently. It had a nice session here on Friday, but when we look at the weekly chart here, you can see there's definitely some support, some interest in buyers coming in here right around the $67 level. So if you're real tactical, if you're looking to get a tight spot to manage some risk and potentially catch a you know, a pullback here in XLE, then, you know, I understand the merits of transacting here for a potential long trade. But 67 or 66, 65, or, you know, if you want to be a little precise, 66.60, it's a good level to manage risk against. We've seen buyers demonstrate the interest around this level, so something to think about, but still relative underperformer. Healthcare also a little bit of an underperformer. Great, you know, great finish to the week. Again, nice, you know, kind of retesting the prior week's highs, but on a relative basis, just take a look at where the 52-week highs were in XLV up here north of 91. We're still 5 points off of it, so about 6%, 5-6% off of those 52-week highs. So let's respect that. Let's understand that XLV is a little bit of a relative underperformer as of recently. Materials, same type of thing here. You can see we're still fairly defined underneath last week's highs here. We're still well off the $64 highs. So again, a nice close to the week, but still a relative underperformer. And then finally, staples, you can see still kind of battling it out here. If we look here at the weekly chart, you can see there's just a lot of supply right in here, right around this 55 to 56 zone here. This is not a, you know, I'm not a fan of kind of jumping in this type of market with all of this supply and prior highs up here, right around 55, 56. I need a little more proof that the bottom is in. There's good, you know, there's good volume coming in here. There's good, you know, evidence that, again, dip buyers are interested around these low to mid 50 levels. But I'd like to just see a little more proof for sort of my style and my interest. So it's kind of in the bottom category as of now. So that, I think, is everything that I wanted to cover in this video. Hopefully you guys had a good week trading. Enjoy the weekend. Thanks so much for watching. If you like the videos, do subscribe to our YouTube channel. Tuesdays and Fridays, that's when these videos come out. Have a great weekend and talk to you next week.